Hi, my name is Nnamdi Augustus Isiche, and I'll be giving a brief presentation on the project topic, the impact of earnings announcements on stock prices, a focus on tech companies in the US and China. Before I delve into the presentation proper, I would like to present the group members that worked on this project, myself, Nnamdi Augustus Isiche, and Sekaza Isaac of group number 2847. Okay, here is my government-issued ID card for verification. And I would like to begin with the goal, the project goal and importance. All right, the goal of the project is to investigate the statistical characteristics of market reactions to earnings announcements of tech companies in the US and China, and evaluate the market efficiency hypothesis in these markets. The project aims to provide insights into the efficiency of the US and China stock markets, as well as the factors that drive market reactions to earnings announcements of tech companies. I'll quickly run through the importance. This project is important in the following ways. First, investment insights. Okay, the project aims to provide valuable insights for investors to make informed investment decisions and manage their risks effectively. Second, we have policy implementations. By utilizing the project's insight, policymakers can develop regulations that promote transparency, information, disclosure, and robust regulatory oversight in these markets. Thirdly, we have company guidance. By analyzing market reactions to earnings announcements, say, of similar tech companies, companies can gain insights into how their own announcements are likely to be perceived by the markets. Then the last but not least, you have comparative analysis. The comparative analysis done in this study serves as a valuable resource for gaining a deeper understanding of the distinct characteristics and opportunities for improvement within the US and China stock markets. So quickly, I would like to run through the literature review and background of studies. Now, this project builds upon the literature that examines the efficiency of capital markets as highlighted by FEMA in 1970, by focusing specifically on the US and Chinese stock markets. The project extends this line of research and evaluates the efficiency of these markets in context of the tech companies' earnings announcements. All right. Also, the project's focus on tech sector aligns with the growing interest in this industry, as emphasized by Raposo, Alves, and Marquez in 2017. The project incorporates factors that influence market reactions, such as firm-specific factors and macroeconomic variables, as highlighted by Bamba and Cheung in 2019 and Farmer and French in 1993. Okay, at this point, I'd like to run through the assumptions made and the choice of technology. All right, for this study, the assumptions made are as follows. First, efficient market hypothesis. All right. Now, by efficient market hypothesis, the study assumes the semi-strong form of the efficient market hypothesis, which suggests that stock prices quickly and accurately reflect all publicly available information, including earnings and announcements. Secondly, the study assumes normal distributions of returns. This study assumes that stock returns follow a normal distribution, which is a common assumption in financial models and allows for application of statistical analysis and techniques. Thirdly, the study assumes independence of events, that the market reactions of earnings announcements of different tech companies are independent of each other, meaning that the performance of one company does not directly influence the market reaction to another company's earnings announcement, right? So for the choice of technology, we decided to use Python programming language to analyze all the factors or to perform the statistical analysis done because of the flexibility that Python offers. We use Python to mine the data, to extract data, analyze, and also plot charts using Python libraries like Matplotlib, Seaborn, and Plotly. Okay, the peer review and feedback we got were in two forms or in two phases. We have the first peer review is on proper implementation of source code, and we implemented that by pushing all our codes to our GitHub repository, which is going to be added to this presentation. We also got a review, a feedback on proper referencing and in-text citation, which was implemented immediately the feedback was received. Okay, so at this point, I'd like to quickly run through my results. So we ran different analysis, beginning with the descriptive analysis. So here on my screen presented the summary statistics for earnings announcements and stock prices. So this summary statistics is for the impact of earnings announcements of stock prices of 10 tech companies in the US and China, and that provide valuable insights. So for the earnings, you can see that the average earnings of our surprise is approximately 1.06, indicating that US tech companies tend to exceed earnings expectations by a moderate margin. Now, the distribution of earnings surprises is relatively symmetric without significant outliers. On the other hand, for the Chinese tech companies, they have a higher average earnings surprise of approximately average earnings surprise of approximately 3.67, which indicates that they consistently surpass earnings expectations by a significant margin. Okay, and the distribution of earnings surprises is slightly skewed to the right, and that is also depicted in the charts. Here is the average price change following the earnings announcement in the US and the average price change following the earnings announcement in China. So I have also the comparative analysis that was done for these two tech companies. And from the comparative analysis, it reveals a significant difference in the impact of earnings announcements on the stock prices of tech companies in the US and China. On average, US tech companies experience a moderate positive price movement. Okay, while in contrast, China companies exhibit a larger positive price movement. Then we went further to perform a correlation analysis. From the table presented, you could see that the correlation coefficient between earnings announcements and stock prices for US tech companies is about 0.3. And this indicates a weak to moderate positive relationship between earnings surprises and stock price movements in the US market. However, the correlation is not statistically significant, suggesting that the observed relationship may be due to change rather than true association. Okay. My contribution, I contributed by providing the topic for this study, data collection, collected data from Yahoo Finance and also from Alpha Vintage API. I performed data cleaning, I performed the analysis and interpretation, developed discussion for the study, and prepared the report. So these are my contribution from beginning to the end of these studies. Now, the conclusion. The overall project aims to investigate the relationship between earnings and announcements and stock prices of tech companies in the US and China. So by analyzing data and conducting various statistical analysis, valuable insights were obtained. And the scope of future work, the potential future work I'm developing in this area include expanding the scope of analysis, incorporating additional variables and methodologies, considering international comparisons, and exploring sector-specific dynamics. All right, so these avenues of research can contribute to a deeper understanding of the relationship between earnings announcements and stock prices, leading to more accurate predictions and informed decision-making in the field of quantitative finance. Thank you for listening. Thank you, WordQuant University, for giving me the opportunity to run through this master's program without paying a dime. Thank you, very good. I owe you big time. Thank you, WordQuant. And thank you to all my supervisors and lecturers from the beginning of this program till this very end. Thank you for being there for me, and to all my students, thank you. I say thank you. Goodbye.